Hi, this is James Shrug with Westpac London's end of day report for Tuesday the 28th of August. It was a down day in Europe with in the overnight session the Japanese government having downgraded its forecasts for the Japanese economy. That set the negative tone. We had some data released in Europe, which actually was okay. I mean, European M3 money supply accelerated to its highest since the recession in 2009, up to 3.8% annual growth pace. And within the data there was the first rise in credit to the household sector, household and businesses, that is credit to the private sector, since January. And the annual growth rate there, which had been negative for a couple of months, turned slightly positive again. In Germany, the North Rhine-Westphalia state inflation figures for August showed a sharp acceleration, up from 1.3 to 1.9% in August. We get the rest of Germany and the German national figures or preliminary figures tomorrow, but that does suggest that higher energy prices are going to see some acceleration, not just in German, perhaps in broader Euroland inflation for August. Just a slight added complication, I suppose, ahead of the European Central Bank's council meeting next week. And related to that, the ECB President, Draghi, has cancelled his attendance at the Jackson Hole, the Fed's annual Jackson Hole Symposium, citing heavy workload, which I'm sure he does have, although there's also speculation that there would be potentially pressure on him to talk about what sort of measures the Council might announce on September the 6th, when of course the Council hasn't yet decided. Other issues related to that, Weidmann, the Bundesbank president and ECB council member, will be going in Draghi's place to the US. Now he's the most vociferously against the bond buying plan, the details of which we haven't got, that the ECB president has proposed. So it's interesting that he's sort of being sent out off the continent while this work is being done. Anyway, in the US, we had some firstly the house price numbers were pretty decent. We had the first annual rise, the year-on-year rise in the S&P Case-Shiller House Price Index since 2010, up 0.5% compared to June a year ago. And another decent, just under 1% rise in the monthly data as well. I think it's 5 months in a row now we've seen that index post monthly gains. So although the US economy seems to be slowing, there's risks ahead from Europe, from fiscal policy. Within that story, housing does really seem to have stabilised, even be picking up a bit after more than half a decade of stagnation, of decline and stagnation. But on the data front, it was pretty weak, with US consumer confidence down, fell from 65.4 to 60.5 in August. That was below the lowest market forecast, and the biggest drop this year, and also the lowest level it's recorded this year, driven entirely by a plunge in expectations. The Richmond Fed's factory index, it rose from -17 to -9, but it was still its third sub-zero reading in a row, implying contraction in that region. In fact, those two data releases saw the equity market pick up somewhat, because they seem to boost this idea that at the Jackson Hole later this week, Fed Chairman Ben Bernanke might be inclined to hint at another round of quantitative easing. So that's the main set of news to report today. In terms of markets, the European markets, as I said, are down, not quite closed yet. It's 4:30 in London at the moment. The FTSE is down 0.2% today. The French market down 0.9%. German market's down 0.75%. The Spanish market down just over 1%, and the Italian market down 0.1%. And in New York, the Dow's down 0.06. Well, basically it's unchanged so far. It's 13,117, but it has traded both in positive and negative territory earlier today in today's session. In bond markets, oh yes, the other thing to mention, the Spanish state of Catalonia, that's where Barcelona is, the administration there has sought a €5 billion loan from the Regional Rescue Fund that was set up by the Prime Minister of Spain last month. Valencia has already accessed that fund, not sure exactly by how much, but Catalonia is now the second state basically to be squeezed out of credit markets because of its unmanageable budget shortfall that investors simply aren't prepared to keep funding. And that was another factor, impacting negatively on European markets today. In terms of so Spanish bond yields up about 10 basis points today. In terms of commodity markets, we've got a mix of wrong sheet. We've got some negative numbers to report with gold down 0.2%. And some soft commodities like cotton and coffee, just to mix it up a bit, down around 1% today. But on the plus side, we've got oil up 0.8% today, and copper's down about 0.6%. So as I say, a mix on the commodity price side, but that didn't prevent the Aussie dollar from pushing higher, mainly on that speculation about Fed Chairman Bernanke, a better prospect that he might hint at QE3 following today's weaker Richmond Fed and consumer confidence numbers. The Aussie dollar has been trading in a 1.035 to 1.039 range against the US dollar. We've got construction spending figures coming up in Australia on Wednesday, and that's it from me today.